So thank you so much for giving me your time today. And thank you so much to Julia and the whole SRI Services team for organizing this really exciting event. My name is Sofia Condes, and I am a Senior Investor Outreach Manager at the FAIRR Initiative. And what I want to do today is hopefully give you some food for thought, quite literally, because I would really like to help you understand how and why a number of the social and environmental issues that we're facing are really exacerbated by our broken and poorly managed food system. I also want to speak a little bit about some of the disruptions, the innovations that we're seeing. But most of all, I would like to help you understand why it matters to investors and what you can do and how you can use your influence as an investor to really help mitigate some of the risks that we're seeing in the food system, and also to take advantage of some of the opportunities that we're seeing towards building a more sustainable food system. So I really welcome your questions. I welcome your feedback. I'll walk you through a few slides, but I really want to leave some time as well at the end for Q&A. And yeah, without further ado, I'll start by kind of setting the scene and letting you know a little bit what do I mean when I speak about those social and environmental issues. But before I start, can I see a show of hands who here is a member of FAIRR, is representing a firm that are FAIRR members? I know there's some of you in the room. Great to see that some of you are here. But also important to see that some of you are not yet members, because hopefully this is also insightful information for you. Before introducing the work of FAIRR, I'll set the scene for a couple of minutes on some of the main challenges and inefficiencies in our food system. So, when we speak about our food system, there are so many angles one can take. We can focus on nutrition, we can focus on environmental issues, on social issues. But there is really a big elephant in the room, which is the production of animal protein. Why? Because to put it simply, intensive animal protein production really has a disproportionate impact on the world's resources. And this is becoming increasingly relevant in a world where we're seeing population growth coupled with increasing pressures in our natural capital. So as you can see from the stats that are here in the slide, there is more than 80% of agricultural land that is used both or either for animal grazing and animal feed production, even though those animals actually represent less than 10% of the food that ends up in our plate. So as you can do the math, that's not really efficient. For example, we're growing vast amounts of soy, of corn, and other commodities to feed animals instead of feeding humans. And also that protein is very much concentrated in some geographical areas, while other geographical areas in the world don't have access to it. It's also not very efficient from a water use perspective. And I think we also, the really striking droughts that we had in Europe this summer, just kind of as a reminder of the fact that water pressures are becoming an increasing reality in our world today. So added to that, we have a war in Ukraine that started earlier this year, which puts additional pressure, given that Ukraine was one of the bread baskets of the world. So then we're seeing also, with this increasing pressure, a lot of the countries in the world, especially those that are the poorest, at risk of famine, while a lot of the production is still directed towards animal, creating a feed or food dilemma. So now diving into the topic that I know has been at the center of the ESG agenda for at least 5 years, climate. Initially, a lot of you as investors, when thinking about emissions, you have been doing a ton of amazing work in using your influence to focus on how to change the sectors that are most responsible for greenhouse gas emissions, such as the fossil fuel industry. But now I think investors are presented with a reality, which is that our food system accounts for nearly a third of the emissions that we produce globally. And this is a sector that, unlike the energy sector, is much more complex and much more fragmented. And it needs a combined set of changes to be able to align with the 1.5 degree scenario. So here in the graph, on the right, what you can see is that the black bar indicates what would happen if we eliminated all the emissions from fossil fuels but we continue business as usual in the food sector. Basically, that would lead us to a 2 degrees of warming. I mean, most likely, more than 70% chance of 2 degrees of warming, even if we had eliminated fossil fuels. And the other bars show the impact of different strategies to change business as usual in the food sector and what that would lead us to. Basically, if we did 50% of all those strategies, we would have a 67% chance of reaching 1.5. So as you can see, it's urgent. This is not just something that is on the sidelines. We need to address it. This is the conclusion. Basically, we cannot speak about climate change without speaking about our food system. And investors, I mean, you're becoming increasingly aware of this. Basically, the agricultural sector contributes more than 14, only the production of protein contributes 14% of those emissions that I mentioned are, as a whole in the food sector, a third. But with improved management, this footprint can be reduced. And also, with some changes and innovations, we can make that change happen. But what does improved management look like? What do we want to see in companies? What are the risks associated with poor management in your exposure as investors? And also, what are some of the innovations and substitutions that we need to see? Which companies are doing better or worse? These are the questions that the financial industry asks, and you need data to answer them. And obviously, as an investor, I mean, when you're thinking about disruption, you're thinking about changes, you're thinking about risks in a sector, you are, of course, going to ask yourself, what does this mean in terms of financial materiality? What we see today is that the animal agriculture sector is increasingly exposed to severe threats and pressures with financial implications. I mean, here are a few of them. It's facing statutory and regulatory risks, facing license to operate risks. We're also seeing changing consumer preferences, which I know are very visible in Europe and especially in London. Climate risk, which I'll touch in a little bit more detail, and also some of the food technology disruption. Now, diving into some of those climate risks that I mentioned, it is becoming clear that the sector is exposed to both physical and transition risks due to global warming, but unfortunately, those haven't yet been priced by the market. This transition and physical risk include things such as increased animal feed costs and declining water supplies, increased costs of cattle mortality and veterinary costs. I imagine some of you saw the pictures of cattle ranchers in Texas. I mean, these are not risks in future, these are happening now. Reputational risks, such as some of the deforestation scandals, especially in the Amazon, which we see in the news, and also other regulatory policy and legal risks, which include, I mean, if we look at fiscal risks, things such as a tax on meat. These are a list that is consolidated from findings from the IPCC reports and the TCFD. But obviously, as an investor, you know that is not just about risks. As we've seen in other sectors, such as the energy sector or the automobile sector, where there are disruptions and pressures, there also are opportunities. For companies and for investors alike who are serious in decarbonizing their portfolios, tapping into some of the transition opportunities in this sector can have a huge impact. For example, by replacing animal proteins with plant-based proteins, you can have a greater impact than all other decarbonization levers in all other sectors. This is from the research that was published 2 months ago from the Boston Consulting Group, where the green bar represents CO2 savings in gigatons per 1 trillion invested. So as you can see from the graph, it's finding that most investments in those technologies to produce more sustainable proteins are actually economically viable. And the impact on capital employed is far greater than in other sectors that maybe one would think are easier, such as transport, buildings, and chemical sectors. So basically, the transition that we want to see in the food system is not just about equity and about sustainability, but it's also fundamentally about better economics. In the graph that you see above me, you can see the relative timing of cost parity for alternative proteins with similar taste and texture to conventional animal-based proteins. So for example, for plant-based proteins, we have reached parity in some markets in Europe today, 2022, and we're expecting on average to reach parity in 2023. For some of the other proteins, such as microorganism-based proteins, we're expecting parity around 2025. And then for animal cell-based technologies, so basically meat in lab, we're expecting to reach parity in 2032. But what about consumer preferences? For those of you that maybe are still skeptical, I think the dairy market is really insightful. 10 years ago, dairy dominated what we knew and preferred as milk in the UK. Fast forward to today, that has changed a lot, especially in the next generation of consumers. So a record 1 in 3 Brits now drink plant-based milk, with usage up from 25% in 2020. And almost 44% of Brits that are aged 25 to 44 are daily plant-based milk users. So this just shows you that even really well-established industries that had practices that we thought were almost impossible to change, almost impossible to compete with, we have seen disruption happen in those industries. So I have now introduced some of the key issues of our complex, challenging, and changing food system. But now I will speak to you a little bit more about how you can navigate those issues as an investor. So let's start with what is FAIRR. The FAIRR initiative is a nonprofit, and we run an investor network focused on ESG risks and opportunities in the global food sector. We're really proud that some of you are here in the room were some of our early supporters when we started in 2016. But we now count more than 350 investor members with over 68 trillion in combined assets. So we were launched 6 years ago when our founder realized that there was really a blind spot when it came to ESG data and information in the food sector, and that there was a need for an initiative that would help close that knowledge gap and use the investor influence to help transition the food system. So we are looking at the ESG risks and opportunities in the food sector with a specific focus on the animal protein industry, because as I mentioned, that is really the elephant in the room. And we're taking a very comprehensive value chain approach when looking at the sector and the risks in the space. And I think it's really important to clarify that when we speak about those risks that I mentioned, it is not only about the morality argument for avoiding such risks. It is really about the materiality arguments. So here in the slide that you see in front of you are the 9 risks that FAIRR has identified as having the highest material impact in the industry. And I assume for most of you, you're aware of the risks with high emissions. But just curious, how many of you here in the room are aware that this is an industry that consumes 70% of the antibiotics in the world, and that with rising antimicrobial resistance, it's going to face increasing fragility to the business model of using antibiotics to grow animals faster and to prevent, not only to treat disease. I don't know if some of you were already aware of the fact that this connects to the pharmaceutical industry. Again, when you open the door of the animal protein value chain, the interconnections are really vast and complex. So as an investor, basically what you want to do is you want to be able to distinguish which are the companies that are better prepared to mitigate and to manage such risks. You want to answer to questions such as which companies are the ones that are refusing to diversify and to adapt their business model to a changing world. And also, most importantly, which companies will see their financials more or less impacted by those changes. Before FAIRR, it was really difficult for investors to get answers to those kinds of questions. And that's exactly the kind of information that our research and analysis does to help you as investors integrate that information into your investment decision making. So I mentioned that we take a full value chain approach because when we assess and we engage with companies in the protein value chain, it really is from farm to fork, and even before that, because we actually look at pharmaceuticals and agrochemical companies. So really all that upstream, all the way downstream to some of the consumer-facing companies, such as the food retailers and the restaurant chains. And our model is very pragmatic. We basically leverage the influence of shareholders in these large public listed companies. and help them integrate those ESG issues into your decision making, and also use your influence to address these concerns with the companies directly. So what does this mean in practice? Our offering basically has three main pillars. We offer the data and the tools, including benchmarking tools to support your analysis. We offer in-depth thematic research and case studies. And then we also facilitate company investor engagement on specific issues that are of material relevance in the sector. So when I reference tools, what do I mean? I will just give you a very short introduction to our Protein Producer Index, which is the only comprehensive ESG ranking of the 60 world's largest protein producers in the world. So basically, it is an ESG benchmark that assesses all of these publicly listed companies that produce animal proteins. And we have basically identified the universe of companies based on two main criteria. First, their relevance to the sector, covering the 5 main animal protein categories, which are beef, dairy, poultry and eggs, aquaculture. And also, we look at basically their market capitalization. So how big and how relevant are they? So in practice, what it means is that it offers for you as an investor a very easy approach and a visual approach to identify who are the leaders and the laggers in the industry, if you want to look at it at a macro level, but also because we do bottom-up assessment for each of the companies that we cover. It gives you very granular data to really understand what are the strengths and weaknesses from an ESG perspective for each of the companies that are covered. And also kind of gives you a much more relevant understanding of where the sector is going and kind of what does best practice look like. So now I'll speak a little bit about our collaborative engagements that I know have been part of some of the discussions that in earlier panels. So our collaborative engagements are done through this investor coalition that FAIRR facilitates, and we really take a very hands-on approach to engagement facilitation. Here you can find some of the engagement thematics that have been active in 2022 on topics such as aquaculture, working conditions in the sector, animal pharmaceuticals, and our latest engagement, which is on biodiversity with a focus on waste and pollution. In terms of process, we work with our investors to establish an initial universe of companies. We do all the foundational research, we develop the methodologies, but then when we bring the investors to join us in an engagement, it is about the investors that are it's really about you guys using your voice. So when we organize the company meeting with some of these large companies in the food sector, it will be you that will be asking the questions. We will support you, we will give you some of the engagement asked, and we will facilitate the discussion, but it really is the investor influence that comes to life in those meetings, and that's why these companies really pay attention to what we're asking them to do through those engagements. Just to kind of elaborate on what that means in practice, I wanted to showcase one of the engagements that we've been running for now 5 years with the largest retailers and manufacturers in the world, focus on understanding their ambition to grow the share of plant-based and alternative proteins and ingredients in their product portfolios. So here, I mean, as you can see some of the logos there. Basically, we include giants such as Tesco, Unilever, Nestle, and we have been in dialogue with them now for 5 years. So this has given us a lot of lessons learned and insights into what you can achieve through that kind of year-on-year conversation and establishing that dialogue and that trust with the companies. We have seen some really encouraging impacts. So for example, Unilever setting a target to boost plant-based product sales 5-fold by 2027. We've also seen Tesco actually do really well in terms of when we benchmark these companies being really at the forefront. But I think most importantly, the sustainable proteins engagement has really shown that you can encourage companies to recognize the material risks associated with their animal protein portfolios and to integrate that into their core climate strategy. And I think this has really been, I mean, the fact that we've been able to move that conversation has really been thanks to you, thanks to the active role that investors have taken. So basically what you see in the chart on the left is that when we started this engagement, we had a little over 30 investors that joined the engagement. The last cycle of this engagement, we had over 100 of you that joined. So it just shows the interest of investors for this issue and to kind of really have this dialogue with the companies. And I think what it has meant, and this is more shown in the graph to the right, is that we've been able to change the conversation from initially really a lack of awareness and disclosure of the risks in their animal protein portfolios. I mean, some of these companies didn't even know what % of their emissions were coming from those animal-based portfolios, all the way towards really having that explicit board-level support for a protein transition. So really moving the conversation forward. So the main takeaway is that while the challenges and the complexity in our food sector are really high, it is really encouraging to see that progress can be made. Progress has started. I would say progress has started. There's still a lot of a long road ahead. But it's important to see that established company practices that, I mean, again, might have seemed impossible to change 5 years ago, are changing, and they're adapting to some of the environmental and social pressures that we're seeing. There's still a lot of work to be done on many areas. I'll just flag a few, but I mean, there's so many more. First, social issues are becoming increasingly relevant in this sector. The need to implement a just transition. If we tackle environmental goals in silo, we might miss out on what's happening and what does that mean for people and workers. Addressing all forms of malnutrition, which is obviously a really important issue in our food system, and also tackling biodiversity risks in the sector. The main driver of biodiversity loss today is our food system. So this is the next big crisis. I mean, we speak a lot about climate, but this is a crisis that is really, we're facing it imminently. But what's most important is that for us, we have proven that the model of using the shareholder influence to make some of these large corporations change and adopt best practices is actually a valid model, and it does work. So finally, for all of you who are in the room today and are not yet members of FAIRR, if you want to benefit from our tools and our research, please do join the network. It is free for investors to join. Everything that we do is philanthropically funded. And hopefully that will give you some of the data and really in-depth understanding that will help inform your investment decision-making. And hopefully many of you in the room will also become allies in using your influence towards transitioning the food system towards more sustainable practices. So let me stop here, but I really, really welcome your questions, your insights, your feedback. Thank you.
One or two brief questions, because we're kind of running out on time. So, gentleman there at the front?
Yes.
Sorry, I think I don't have the microphone right there. Oh.
Yeah, thank you. That's really interesting. Just a question I've got. Perhaps another elephant in the room is also the impact this will have on farming, because obviously, I mean, you mentioned the companies there that are the protein producers, but I mean, farms are behind a lot of this. Just wondered what your thoughts are there, because you know that would be a huge change and a huge cultural change as well for a number of countries.
Sorry, I'm going to have to ask you to make it quick though, because I want to try and bring us in on time, like we said. So, but
yeah.
please go ahead.
So,
and hopefully, sorry, can I just check? Are you staying for drinks afterwards? Are you staying for drinks at 5:30?
Yeah, I'll be here.
So we can carry on this after 5:30.
Yeah. So very quick. I mean, obviously a big question. So my answer will not be exhaustive, but yes, it is really important. When we look at some of these big companies, they work directly with farmers. So for example, we've seen a lot of the work that companies such as Nestle are doing to really accompany farmers to either transition what they're growing or transition their practices, for example, towards more regenerative agriculture practices. So we do believe that this corporate influence can have an impact. It needs to go hand in hand, and that's why the just transition model really needs to be embedded in any change that we have from companies. But happy to discuss in more detail in the drinks or in the break after.
Great. I'm sure Richard will stay. Please go ahead with your question.
Just from a perspective of being vegan most of my life, apart from some milk and dairy and cheese, is the fact that I grew up in an Indian household, my mum making me lentil curry, which is soaking lentils overnight, putting some paste and coconut butter, whatever else, and it was done. It doesn't cost about 50p a day. My concern as a long-time vegan to many non-vegans is this new trendy veganism, which a lot of the times is processed, is made in a lab, is not natural, is not how it's meant to be. And most importantly, with my diet, which is just soaking them overnight, I've cut out all the layers of supply chain that don't need to be there. Are we not disingenuously adding extra layers and complicating vegan food for those non-vegans and saying, here's some lentils, here's some local veg you get from your market? Are we not overcomplicating it?
Yeah, really important question as well, and I could have a very long answer, but I'll say, whatever you bring to the market, it has to be desirable, it has to be affordable, and it has to be accessible. So a lot of the options that these companies are actually putting out in the market are not for vegans or vegetarians. They're for the meat eater that wants to have an option, and instead of ending their meat consumption, they're reducing their meat consumption. So I am a big fan of lentils. I'm a big fan of really having food as close to the source as possible. But the reality is that for convenience reasons, there will still be processed food in the market. We need to make sure that those alternatives are as nutritious and as simple in terms of ingredients and additives as possible. But that food will still exist. So we need to think about how do we make those alternatives better than what they have as option now. So for example, if you're changing a chicken nugget, which is also highly processed, towards a plant-based nugget, how do you make it better? I think it's and it's at the core of your question, is super important. But again, I think the idea of everyone will be transitioning to soaking lentils is not realistic for everyone and for every type of lifestyle. So we need to think about different options. And I think that is a very valid one for those that can and for those that actually commit to doing that. But there will still be a lot of other consumers that won't do it. So how do we capture them?
So if we can take big steps in the right direction, we're not going to get to exactly where we need to get to. But if we can take a load of carbon out of the chain, then we're helping address a lot of the other issues we've been talking about today. But
exactly.
Look, let's pick up on that kind of discussion later, because it's important.
Both
and it's
really
interesting.
important questions. So sorry I had to give short answers, but happy to discuss in more detail.
Yeah. Okay, if I can please ask Brian, Suresh and Charlotte to come onto the stage now. And sorry, I beg your pardon, while you're on your way, if we can please thank Sophia for her presentation.